Hi, friends, and welcome back to Money Girl, a podcast that helps you master your money so you can live rich and love the journey. I'm Laura Adams. If you're a new listener, or maybe you've even been with me for a while but are not subscribed to the podcast, that's the easiest way to make sure you never miss a weekly episode. It's free to subscribe in lots of great places like iTunes, Stitcher, SoundCloud, and Money Girl is even now on the Spotify mobile app. In this show, we're going to talk about getting a bonus at work. If you've been fortunate enough to be paid a bonus in the past, you probably experienced joy and confusion at the same time. It's great to have the extra income, but when you look at your paycheck, the net amount you see can be surprisingly less than you expect. Now, even if you haven't received a bonus yet at work, you probably will at some point in your career. So the information in this show will help you. I hope you'll stay with me. I'm going to explain in an easy to understand way how your bonus is taxed and different types of income that get signaled out for special tax withholding. And I'm also going to answer a great question that came in from a Money Girl listener named Steve E. about how getting a bonus affects your contributions to workplace retirement accounts like a 401k or 403b. As always, if you want to review the notes for this show or access links to resources that I mention, just visit the Money Girl section at quickanddirtytips.com. You'll want to look for this episode, which is number 459, called Got a Bonus? What is the bonus tax rate? There are a variety of situations that might qualify you for a bonus at work, depending on the type of work you do and your company, of course. Bonuses are typically tied to performance, such as achieving company goals, accomplishing individual goals, or hitting a combination of both of those metrics. For instance, you might receive salary plus a 20% bonus each quarter. 10% might come from meeting the performance objective of your job, and the remaining 10% would be paid if the company hits its overall profit target. Another type is if an employer offers you a signing bonus. That's meant to entice you to leave your current company and take a new job. Or you could receive a retention bonus if you stay with the same company for a certain period of time during an important transition, like a merger or acquisition. If you relocate for a job, you might be paid a moving bonus that covers some or all of your estimated moving expenses. And if you get fired or retire early, a bonus might be part of a severance or retirement package. That also includes unused vacation pay or other benefits. These are some examples of income that the IRS considers supplemental wages because they're paid in addition to your regular wages. Your employer is required to withhold taxes on supplemental income differently than for your ordinary income. So that's why it's an issue for your bonus income. So the major point that I want you to remember from this podcast is that bonus income is ultimately taxed the same as your regular pay. The special treatment of withholding for bonus income is simply meant to ensure that you don't have a surprise liability at tax time. Now, if you've gotten a bonus in the past, you may be thinking, well, then why does it seem like I end up paying more tax on my bonuses? Well, stay with me and I'll explain exactly what happens. Bonus payments are subject to Social Security and Medicare taxes, just like your regular wages are. But they have different federal and state withholding practices. That's why it can be a little different than your regular income. Your employer can handle the withholding in two different ways. They can use a percentage method or what's called an aggregate method. And I'm going to just give you a really simple explanation here. The percentage method allows an employer to withhold tax from your bonus at a flat rate. They use 25% and issue payments separately from your regular paycheck. And this is the most straightforward and simple method. However, in my experience, it's not the most common. Now, I want to make a note here. If you're really fortunate and you get a 7-figure bonus, so that's above $1 million, the IRS withholds amounts above $1 million at a higher rate at 39.6%, in addition to the 25% of the amount below $1 million. So this is all if your employer is using the percentage method. The other type of method that I mentioned that can be used for your bonus payment is called the aggregate method. This is when an employer withholds tax by combining your bonus with your most recent regular pay amount and uses a tax rate found in the withholding tables, which is based on information you submitted in Form W-4. Remember that? It's called the Employees Withholding Allowance Certificate. So let me give you an example. Let's say you're single and make $50,000 a year. Your net withholding for federal taxes typically would be about 15% per paycheck. Now, if you live in a state that has state withholding as well, it could be higher than that. But for the purposes of this example, let's say it's on average 15%. But if you got an annual bonus of $5,000, the aggregate method calculation would result in a higher amount of withholding. It would be about 27% from that payment for your bonus. However, what you need to know is that this higher than normal withholding will be credited to you for the year. So when you file your taxes, any amount you've paid that exceeds what you actually owe comes back to you as a tax refund. In other words, your bonus may be temporarily subject to high withholding, but it won't be taxed at a higher rate than your ordinary income for the entire year. Once the overage is paid back to you as a tax refund, you'll end up paying the same amount of tax on your supplemental wages as for your regular wages. So while it may seem disappointing to take home a smaller net bonus than you'd like, the upside is that you won't have to pay extra on tax day. In fact, you'll likely get a larger tax refund than you expect. But what if you're counting on getting a higher net bonus payment? Well, assuming your employer uses the aggregate method for withholding calculations, you can adjust your withholding by filing an updated Form W-4 with your employer. As I mentioned, the W-4 is how an employer knows how to calculate your withholding based on your tax filing status and the number of dependents, or what are known as allowances. The higher your allowances, the less your withholding. For instance, if you're married and have one child, you'd typically claim one allowance. But if you want less tax withheld, you could claim 5 allowances instead. This isn't lying, nor does it apply to your actual tax return, where you must indicate the correct number of dependents. Ultimately, it's up to you to manage your personal finances so you can pay the tax you owe each year. If you have too little tax withheld during the year, you'll have to make up the shortfall by the tax filing deadline. If you're concerned about bonus withholding, be sure to speak to your payroll administrator at work. If you do decide to update your W-4, be sure to submit it at least 30 days before your bonus is paid, so your payroll department has plenty of time to process it. As I mentioned, I received a question from Steve E. about how bonus income may relate to your retirement contributions. Here's what he says. Thank you for the great Money Girl podcasts. Is there any financial benefit to taking retirement contributions for my 401k from my bonus income instead of from my regular paycheck? Or does it not matter which part of my compensation the contribution comes from? Steve, thanks for sending in this question. It's a great one that I've actually never received before. It's interesting because on the surface, it might seem like reducing bonus income that's subject to higher withholding would be more beneficial. But that's not the case. Since your bonus income is eventually taxed the same as your regular income, taking retirement contributions from either type of income has the same result. Traditional pre-tax contributions to a retirement plan allow you to cut your taxes by reducing your taxable income in the current year. Don't forget that your retirement contribution will typically be deducted from your bonus income unless you elect to change it ahead of time. That's another reason why your bonus may seem really sort of surprisingly low at first, because your retirement contribution may be a big chunk of what's deducted out of it as well as your withholding. For instance, if 10% is deducted from each of your regular paychecks for a 401k contribution, 10% will also be deducted from your bonus payment. For 2016, you can contribute up to $18,000 to an employer-sponsored retirement account. like a 401k, 403b, or 457 plan. If you're age 50 or older, you can make $6,000 in additional catch-up contributions for a total of $24,000. Saving more of a bonus can boost your retirement savings so you reach your goals faster. So consider increasing your retirement contribution ahead of a large bonus payment. Just keep an eye on your total contributions for the year so you don't exceed the annual allowable limits for the year that I just mentioned, either $18,000 or $24,000 if you're age 50 or older. If you have a money question, the best places to reach me with it are my contact page at lauradadams.com and my private Facebook group called Dominate Your Dollars. You can find the group by searching in Facebook or by sending me a text message right now. Just text the word dollars, DOLLARS, to the number 33444, and I'll send you an invitation to the group right now. And if you're enjoying the show, please take a moment to submit a quick review. It's the best way to show your support and to help other people find the show so they can get the information and inspiration to make long-lasting positive changes in their financial life. I want to thank a new listener called Carpal Tinder who just submitted this 5-star review in iTunes. He or she says, "Clear and concise. Love this podcast. Just discovered it and I'm hooked. I love how Laura explains things in a clear, concise way. Perfect for beginners and people farther along. The short format is great. It gets right to the point and I can listen to a few on my drive home." Thanks so much for that review. It really means a lot to me. I'm thrilled that you found the show and I want to welcome all new listeners. That's all for now. I'll talk to you next week, courtesy of Money Girl, your guide to a richer life.